a little earlier on. It's 5 Live and it's 10 to 11. Figures out today show that house prices in the UK remain relatively unchanged in 2011 and more of the same is expected into next year. The Nationwide has said the average home rose in value by 1% this year. A home still a good investment, or is it better to rent? Call me with your experience. 0500 909 693. Text me as well, 85058. Obviously that's the average figure that I quoted there. Certain parts of the country have seen prices fall considerably. Others have actually seen quite a decent rise. Let's speak to Robert Reid, who's an estate agent in Cheshire. Robert, hi.
Jonathan, good evening.
And Jonathan Davis, an economist and wealth manager. Jonathan, good evening.
Hello, Jonathan.
Robert, first of all, at risk of there being too many Jonathans involved.
Yes.
Robert, what are you feeling in Cheshire?
Yeah.
What's the mood?
Sure, I think the mood is one of in the midst of an incredible economic climate where so much is going on and there's so many conflicting signals and sort of extraordinary headlines, there's an odd sense of steadiness, actually. And I think the figures, I would say, broadly represent exactly what I've been feeling on the ground, really. If you take the last 12 calendar months, we've seen prices that have just stayed still. You know, they haven't increased, I think that's fair to say. Maybe percent, maybe not. But I don't think there's been any falling either. So I think it's been a very, very, in prices terms, steady market.
What about demand, though?
Well, demand is reasonably good in certain areas. So often you get, for example, it's the classic thing, school catchment areas or maybe nearer walking distance of certain amenities. So certain areas can be hotspots for their particular localised factors up and down the country. As a general rule, there are a lot more properties available than there are people wanting to buy them at the moment. In rental, it would go the other way around. There's more people wanting to rent than there are houses. So in terms of supply, it's not an easy market, but I think prices have stayed steady.
So actually, you've sort of almost defeated your own argument there, because you've said prices have remained steady, but actually there aren't as many people out to buy. It's a case of supply and demand, isn't it, the property market?
I think it's a lot more than that. I think if it was pure, I think that's a factor within it, but so much of it is driven by people's circumstances as well, in terms of when they have to move, when they want to move, a certain area they want to move to. So you can have sort of pockets, and of course, with all these figures in terms of staying still or going up, they are average figures. So you can have a situation where a certain area they've increased by 10%, in another area they might have fallen by 10%, so they will average out staying still. So you have to take into account all the various individual factors that kind of make up this bigger figure. But I think as a general rule, which is what we're talking about, it has been pretty steady.
Jonathan Davis, things are steady, things are stable. What do you make of that?
The numbers of transactions, of sales, in other words, are down 50 to 60% nationally compared to a few years ago. And that is in the light of the lowest interest rates in history and probably the lowest interest rates possible. The reason for that is because the economy is dire, unemployment is rising, the EU is going bust as we speak. The global economy is going down the pan, and people cannot get mortgages because the banks are technically insolvent. Thus, the housing market is in a state of collapse, and it will continue to be in a state of collapse for years.
No, that's not accurate. I mean, if you look at 2008, that was a falling market. You saw a dramatic fall, 20% from the peak in end of 07. In 08, you saw a falling market, so it definitely did. Didn't collapse, but it certainly fell significantly and substantially. But there is very little evidence on the ground in the last 2 to 3 years, actually, to support that it is collapsing. Because if it was collapsing, you would be seeing repossessions up year on year on year on year, which we didn't actually have last year. And you'd also see rapidly falling prices, which we haven't had.
Is it the case, or is it not the case, that housing transactions are 50 to 60% lower than 2006, 2007?
I can only comment for myself. That's not how I find it.
Well, I'm talking about the national housing market, because it's a national radio station.
Absolutely fine, but that's not my experience, and I think it's fair to say that you're using a figure from the very top of the market to where we are now. For the last 3 years, I think you would find that transactions have been very, very steady, as indeed the figures will back up, so it's all where you take your reference point from.
Jonathan, do you think...
below 4 years ago.
Jonathan, do you think, because we all obviously get drawn into discussions about house prices, and we talk about these surveys that talk about average house prices, do you think if you're saying that the prices are stable, relatively unchanged, that is clouding the wider picture? That doesn't necessarily mean that everything's stable, does it?
Oh, of course, the market is stable. In fact, because nothing's
We
moved.
agree.
House prices are actually down about a few percent in the last year. According to the Land Registry, to November they're down 2%, and that's only England and Wales. Scotland's down 3 or 4%, and Northern Ireland's down about 8 to 10%. So prices nationally are down 3 or 4%. That's not including the rate of general inflation, which of course is 4 or 5%, or at least that's what they tell us, but I think most people's experience is that inflation is higher. So in real terms, house prices are down between 5 and 10% in purchasing power terms. And as I say, that's with a backdrop of the lowest interest rates in history. Now, I'm not suggesting that interest rates are going to rise next year. They probably won't. But I do believe that the EU will break apart. That will create another recession like 2008, and that will raise unemployment, which again will reduce house prices next year and indeed for the next couple or few years.
Robert?
Well, the answer is that some of those theories might come true, but I would kind of point out, I've had these debates with Jonathan before, where this sort of doom-laden scenario has been laid out, and I'm pleased to say it hasn't always turned out to be that way. So yeah, there are. I mean, I think the repercussions of the euro, I don't think anyone can fully predict what they will be. But I have to say, I've sat in this chair over the last 2 or 3 years, where I've been looking at very similar sort of scenarios with, in the domestic sense, austerity cuts, and what effect will that have on household incomes. And I don't pretend the market's good. It's not a good market, but it is a steady market. And the worst market to sell in is the falling market. When people are saying, has it hit the bottom? Has it got further to fall? You know, shall I go with this? If I buy this now, will it be worth less in a few months' time? I don't think people are feeling that.
Do you just sell, or
at the moment.
do you rent out as well?
Do rent as well.
So
yeah.
I would hazard a guess that your rental market is very strong at the moment.
Yes, I think that's fair. Yeah.
Now, does that not pretty much tell us everything?
No, because you see, the sale market, I've got the group I work for has got 5 offices. Now, there's a mixed picture, if I'm dead honest with you, across the 5 offices. But there are, in a couple of those, the sales have been very, very strong. So it's not necessarily that your rentals are going to go forward and upwards at the expense of sales. Some of the times it can run in parallel.
What do you think about someone who buys a property at the moment?
Right, well, what I would say about buying a property is I think people who are purely buying it to make money from it, purely buying it to see it as an investment in financial terms, are viewing it wrongly. You know, I think most people will buy a house because it suits them to live in for their circumstances. And I think if you take property over a medium to longer term, I do believe you'll get a good return on that. But I don't think you should view it in investment terms. I think you should view it in the sense of, will this be somewhere I want to live? Will it suit my circumstances? And the guarantee with rental is, over a longer period, you know it's dead money. It's not going to go up. With property, it might fall, but it might well go up. And I think if you get enjoyment for a place over 10, 15 years and it stays still, you've had a lot of value from it. And if you've had enjoyment and value from it over 10, 15 years and it goes up in money, then great.
And Jonathan Davis, would you consider buying at the moment?
No, I wouldn't touch property with a barge pole. House prices are still, in relation to national average earnings, they're still 7 or 8 times. The long-run average is 3.5 times. They're still way above what they will end up being. And, you know, those who buy just now will kill themselves financially over the long term because, as I say, at some point, because of the money printing that the Bank of England and the successive governments are doing, at some point inflation is going to roar. Thus, interest rates will rise. And if house prices aren't rising with 0.5% Bank of England rate, what on earth are they going to do when you get 5% Bank of England rate? And that's going to happen in a few years' time.
Does all still depend on where you buy, though, doesn't it? It is impossible to generalise on things like this, but we welcome your thoughts both. Jonathan Davis, an economist and wealth manager, and Robert Reid, an estate agent in Cheshire as well. Thanks for being with us tonight. It's approaching 11 o'clock, just before the